off. In about 30 minutes or so, we will see the release of the U.S. unemployment rate. The anticipated forecast is 7.2%, according to a survey conducted by Bloomberg, and we will also see the U.S. non-farm payrolls. And according to Forex Factory, the anticipated data is 180K. Now we all know that the U.S. labor market is highly important for the U.S. economy. And if we talk about a little bit about the previous data, then what we can say is that in October, U.S. non-farm payroll employment expanded by 204K jobs, 53 above September reading. Job growth was widespread in October, excluding federal government employment, and the unemployment rate climbed mildly to 7.3% from 7.2% in September. The change in total non-farm payroll employment for August was revised from plus 193K to plus 238K, and the change for September was revised from 148K to 163K. With these revisions, employment gains in August and September combined were 60K higher than previously reported, indicating an upturn in growth market. And job gain of 184K is anticipated, with a drop to 7.2% in the unemployment rate. We can also talk a little bit about, with regards to the U.S. unemployment rate, some of the economists here that provided their expert opinion on what could be the unemployment rate. So we have here a number of economists. We have here the median forecast average high estimate of 7.5%, the low estimate 7%. Overall, 82 economists were surveyed when it came to the U.S. unemployment rate. What I can also say that the pickup in employment over the last 3 months signals companies are confident that demand will improve and gives American workers the means to spend. The data also underscore the view of Federal Reserve policymakers that labor conditions are brightening as they consider when to scale back monetary stimulus. Stuart Hoffman, chief economist at PNC Financial Group, he says it's sort of uncanny how steady the growth has been. The improvement in the job market is sufficient over time that an extraordinary amount of quantitative easing, 85 billion US dollars a month, almost $1 trillion US dollars a year, isn't going to be necessary. It isn't going to be necessary as we go through 2014. And finally, what we can also discuss before I move forward and give the word to Thomas is the potential impact on one of the currency pairs, USD Japanese yen. According to our Dukascopy fundamental contest, 73% of traders who participated in the poll believe that the impact will be bullish, while 27 believe it will be bearish. We can also just have a look here at some of the comments. For example, Day Trader, I'm not sure if he's here today or not. No, he's not. Otherwise, we might have been very happy that we're commenting him. He said that, yeah, he's trading. He said that expectation for today's meeting has grown exponentially after later in the week the ADP on farm employment changed, bet expectation, and come in at 215K. There are growing bets for December taper, and a positive non-farm payroll figure could increase the possibility of taper later than expected. We should see Fed moving away from its easing cycle, and the recent strong economic data could be positive for better than expected figures, which should booster the US dollar, and the current dollar uptrend should start resuming. Okay, now without further ado, I'd just like to welcome Thomas onto the whiteboard to comment on some of the technical aspects and the potential impacts of the upcoming data release. So in case of any questions, do feel free to let him know in the public chat.
a great day. My computer is a little bit lagging with the screen sharing, but I hope it will turn on soon enough. So today I will be presenting alone, as you know, Friday Alexander decided to quit job earlier. No, I'm joking. He just decided he has school to attend still today. What you're seeing right over here, wow. Again, drawing head. What you're seeing right over here is 1 minute chart on the United States dollar Swiss franc. That's what I will present on a possible positive trading strategy. Currently, the pair is trading slightly above the boundaries of a 1 minute downtrend. I guess, well, it should be visible right over here. At this point, so these two trend lines indicate right that. So as you can see, it is sort of testing it at the moment and trading around 89.55. What is working towards and supporting the idea of a positive surprise, and why this pair was chosen as, first of all, the current market sentiment is strongly bullish. 74% of traders are already long on the pair. Swiss franc is sold in 73% of cases across the board, and United States dollar is bought in 59% of cases across the board. And I guess I didn't check the pending orders. Oh wait. System says none is there. I guess some sort of technical malfunction. Well, it happens once in a while. Right, so now if we also look at the technical indicators, what is going on? First of all, of course, yeah, we're going to see some bearishness in the technical indicators due to the fact that almost all trend indicators actually point at further depreciation of the pair, which is pretty much coming from the fact which I showed a few minutes ago of the downtrend in the last. I need to check how long it was being sold off. So in the last, and now what it shows, since 7:30 GMT approximately. So that's a good 6 hours, almost 6 hours of trailing lower. Therefore, it's no surprise that trending indicators actually point at further depreciation of the pair. However, I still believe that if the pair will see better than expected data, which is already predicted to be slightly better than the last week, we hopefully will see a substantial trading activities. Now, if to see what are the possible stop and losses, right? First of all, take profit at the weekly S2 of 89.72.8, which is 15.5 pips higher than the current market price, and suggested and possible stop loss would be at the daily and weekly at the same time low. Apparently, I need to make it a little bit. Here is at 89.44.6, so 1/10 of a pip higher than indicated here. So those would be a pretty good short-term targets. And for those who actually believe that the pair will see a worse than expected data, just interchange these numbers and work around it. Now for the medium-term targets, we could work as for take profit. In this case, as a positive surprise trading strategy, we could work with the daily high and monthly S1 at the same level of 89.79. Or for, let's say, stop loss or take profit, if you believe in a negative surprise of data with the daily S1 at 89.3300. There is a small chance that, as it seems, seems to be working rather well, that the previously showed downtrend in 1 minute chart actually, and the boundaries of it right over here and this line right over here could be working pretty well as well. Now let's see what is going across the board in general. How markets look into United States dollar in general. So what do we have here? First of all, of course, we can see that substantial, well, I'm pretty sure it's reasonably safe to say that we are seeing sort of 50-50 division across the markets, because we have readings which are strongly bearish towards the United States dollar, and then we have a few readings which are significantly bullish towards the United States dollar. So I guess there is no real strong effects coming only from the United States dollars, and it gets outweighed with the effects coming from the other currency pairs as well. So I guess it will be very interesting to see what we will seeing with this release of this data. So let me just zoom in a little bit, I guess. Just once again, currently the pair is trading slightly, once again, below the indicated downtrend resistance at around 89.54, just slightly below the 200 bar, effectively 200 minute simple moving average of 89.57, which can be seen right over here. So for a possible trading strategy, we could do, as indicated now, stop loss to buy at the market, stop loss at the daily and weekly low of 89.44.6, and weekly S2 of 89.72.8 being as our take profit level. So we're in the last minute of before the release of the data. We're seeing some bearish action, however, I would say it still could be easily perceived as a normal trading activity, as the pair appreciated go around 10 pips in the course of 5 minutes. So just some of the traders capitalizing on their gains, I guess. And we can see some stabilization and increased market activity with the 30 seconds left till the release of the data. So let's see what the data brings to us, and hopefully our dear Dukascopy news release will post something very soon. So let's see what we're having. Currently the pair is trading at 0.895253. We are seeing increased market volatility, trades of 5 to 6 pips, and could it be that we had at least some of the data coming out? As per seems to be, I guess, yeah, the data came out, and it's already, the initial market impact is already 21 pip days, testing even actually our medium term target was breach of the daily high monthly S1. So I'm very happy that this possible trading strategy worked out pretty fine. So I guess it will be a little bit too early to say that 1 minute before the trading the market already started to show signs. So I would say that current market actually reaction was around 20 to 22 pips, because the action 1 minute before the trading of the was rather mixed. So what we're seeing actually, unemployment rate 7% when the pre-year was 7.3 and expected 7.2. Non-farm practically no change. Average hourly earnings monthly and monthly slightly better than expected, but I guess most of the effect came out from the unemployment rate. So I guess the bullish action which we saw, a depreciation of 13 pips after the release of the data, of course, was pretty much both capitalizing on their gains. Since most of the data came out better than expected, I guess it will be safe to assume that the pair will slowly trail towards the daily high once again, but I don't see it reaching daily pivot point on this data alone. So I guess we'll wait until the close of the minute to see what is completely ending in the market, what is going on. So we can see, just to repeat myself once again, initial market reaction 22 pips, then we saw a fall of 13 pips, which again, pretty reasonable to say that, you know, some of the traders were going out of the positions as they weren't expecting the data would be so better than expected. This is mainly related to short traders. And long traders, of course, just sold their portion of gains and closed their positions, therefore pushing it down the price slightly lower. And now I guess we're seeing some of the traders who thought that the numbers, especially of the unemployment rate, were relatively much better than expected, therefore decided to enter along and therefore push the price currently. And once again, daily high, daily high now, of course, is a little bit few pips higher, but let's say monthly S1 of 89.79.0 seems to be providing initial and substantial resistance for the pair to advance further. So I would say, to my opinion, the daily pivot point might be reached, but definitely not on this data, on this release alone. So I guess that will be all from my side. Any questions or remarks or comments, feel free to share them on the chat section. And yeah, that's all from my side. Wish you all a great weekend, and give floor back to you, Gita. And Gita apparently is busy, so Dogdao, maybe you are there and would like to comment on the data which just came out and have some sort of comments or ideas what, where, and how, if you're there, of course. If Dogdao is not there, apparently, Gita, I give floor back to you.
Thank you, Thomas. Now, Dr. Da, what are your thoughts and comments on the data release? So definitely U.S. unemployment is way more positive than expected. What are your thoughts? Dr. Dow? Your microphone? Okay, well, I guess if Dr. Dow is not there, then we'll just wrap it up. Thank you all very much. Have a wonderful Friday, prosperous green pips, and hope you're able to manage the jumpy markets.